Preparing for a financial analyst at CVS Health interview? You've reached Candy Mentor, and this video is for you. We'll walk through 20 key questions you're likely to face. For each question you'll see a sample answer followed by the key points to cover. Subscribe, like, and share, and drop a topic request in the comments. Question 1. Tell me about yourself and why you are interested in a financial analyst role at CVS Health. I have built my experience around financial analysis, forecasting, and translating data into clear business recommendations. CVS Health interests me because its businesses span pharmacies, pharmacy benefits, insurance, and care delivery, creating complex but meaningful analytical questions. I am comfortable building models, investigating variances, and presenting conclusions to non-finance partners. I would bring strong attention to detail, curiosity about healthcare trends, and a practical mindset focused on improving profitability, affordability, and patient outcomes. While answering, focus on your analytical background, interest in healthcare economics, ability to work with large datasets, communication skills, and how CVS Health's integrated pharmacy, insurance, and healthcare businesses attract you. Question 2. Why do you want to work for CVS Health? The attraction is both the scale and the complexity of CVS Health. It operates across retail pharmacy, health benefits, pharmacy services, and healthcare delivery, so financial analysis directly influences major decisions. I also value the company's ability to connect financial performance with access, affordability, and patient care. This role would let me apply rigorous analysis to a business undergoing meaningful transformation, while learning how operational decisions affect medical costs, pharmacy economics, cash flow, and long-term growth. Make sure to cover CVS Health's scale, integrated business model, healthcare mission, transformation initiatives, and the opportunity to analyze financial performance while supporting affordability, access, and operational improvement. Question 3. Walk me through the 3 financial statements and how they connect. The income statement shows revenue, expenses, and net income over a period. Net income flows into retained earnings and begins the cash flow statement. The balance sheet presents assets, liabilities, and equity at a point in time. The cash flow statement reconciles net income to cash through operating, investing, and financing activities. For example, higher receivables can increase revenue without increasing cash, while depreciation reduces earnings but is added back in operating cash flow. Together, the statements explain performance, liquidity, and financial position. In your answer, talk about the income statement, balance sheet, and cash flow statement, net income linkage, working capital movements, non-cash items, retained earnings, and the importance of checking that the balance sheet balances. Question 4. How would you build a financial forecast for a CVS Health business segment? I would begin with historical revenue, expense, and cash flow trends, then identify the operating drivers behind each line. For a pharmacy segment, those might include prescriptions, reimbursement, generic utilization, front store sales, labor, and store count. For insurance, membership, premium yield, medical costs, and medical benefit ratios matter. I would build base, upside, and downside cases, document assumptions, compare outputs with company guidance, and establish variance thresholds that trigger forecast revisions. Be sure to mention historical trends, operational drivers, volume and pricing assumptions, segment-specific metrics, scenario analysis, management guidance, sensitivity testing, and regular updates when actual results differ from expectations. Question 5. What is variance analysis, and how would you investigate an unfavorable variance? Variance analysis compares actual results with a budget, forecast, or prior period and explains the drivers. I would first validate the data and determine whether the difference reflects volume, pricing, mix, timing, accounting, or a one-time item. Then I would speak with the relevant business owner and quantify whether the variance is temporary or structural. My output would include the root cause, revised outlook, financial impact, and a practical action, such as adjusting staffing or updating reimbursement assumptions. Focus on separating price, volume, mix, timing, and one-time effects, validating data, identifying the operational root cause, quantifying the forecast impact, and recommending a corrective action rather than merely reporting the variance. Question 6. How would you assess whether a revenue increase is high quality? I would look beyond reported growth and decompose it into volume, price, mix, acquisitions, and foreign or accounting effects. At CVS Health, I would examine membership, prescription volume, premium yield, reimbursement, and payer mix depending on the segment. I would also test whether margins, receivables, and operating cash flow support the increase. Revenue growth from sustainable enrollment or prescription volume is stronger than growth driven by temporary pricing, favorable mix, or an acquisition that has not yet produced cash benefits. Make sure to cover volume, pricing, payer mix, product mix, sustainability, receivables, contract terms, margins, cash conversion, and whether reported growth reflects genuine operating improvement or temporary accounting effects. Question 7. What financial metrics are important for CVS Health's pharmacy services business? Important metrics include client membership, prescription volume, claims, generic dispensing rates, revenue, gross profit, adjusted operating income, and operating cost per claim. I would also understand rebate economics, manufacturer contracts, pharmacy reimbursement, and the difference between gross and adjusted revenue presentation. Retention and client wins indicate future stability, while utilization and mix affect profitability. The key is connecting each metric to cash generation and margin, rather than treating growth in claims or revenue as automatically positive. In your answer, discuss claims volume, prescription volume, client membership, gross and adjusted revenue, rebate economics, generic dispensing, retention, operating costs, margins, and how contract structures affect reported results. Question 8. Which metrics would you monitor when analyzing CVS Health's insurance business? I would monitor membership, premium revenue per member, medical costs per member, medical benefit ratio, administrative expense ratio, retention, and risk adjustment effects. I would segment results by Medicare, commercial, and Medicaid products because economics and seasonality differ. Claims development is especially important. Reported costs may change as more claims arrive and estimates are updated. I would pair profitability metrics with enrollment quality, utilization trends, and regulatory developments to distinguish temporary claims pressure from a structural deterioration. Be sure to mention membership growth, premium revenue, medical costs, medical benefit ratio, administrative expense ratio, risk adjustment, retention, product mix, regulatory changes, and the timing of claims development. Question 9. How would you analyze the profitability of a retail pharmacy location? I would build a location-level contribution view using prescription volume, reimbursement, generic mix, front store sales, labor, rent, utilities, shrink, and other controllable costs. I would compare the location with its budget, prior periods, and peer stores while considering local demographics and competition. A store can have strong revenue but weak profitability if reimbursement or labor costs deteriorate. I would then separate short-term fixes from strategic decisions about staffing, services, hours, or the location's role in the broader network. Focus on prescription volume, reimbursement, generic mix, front store sales, labor, occupancy, shrink, local competition, customer traffic, contribution margin, and whether location-level performance supports broader network and patient access objectives. Question 10. What is the medical benefit ratio, and why is it important? The medical benefit ratio, or MBR, measures medical costs as a percentage of premium revenue. A higher MBR generally means more premium dollars are being consumed by care costs, leaving less for administration and profit. I would analyze it by product, membership cohort, and period, while considering seasonality, utilization, risk adjustment, and claims development. A rising MBR may reflect temporary flu or catastrophic claims, but persistent deterioration can signal pricing, underwriting, provider, or benefit design problems. While answering, define the ratio, explain its relationship to premium revenue and medical expenses, discuss trend interpretation, membership mix, claims seasonality, regulatory expectations, and how it affects insurance segment profitability. Question 11. How would you use Excel or other analytical tools in this role? I use Excel to structure assumptions, build forecasts, perform variance analysis, and create sensitivity tables. I am comfortable with pivot tables, XLOOKUP, SUMIFs, index match, logical formulas, charts, and basic automation. For larger datasets, I would use SQL, Power Query, or a business intelligence platform to clean and aggregate information before modeling. I also build checks for duplicates, missing data, balance errors, and unexpected movements so another analyst can review and reproduce the work confidently. Make sure to cover model structure, data cleaning, pivot tables, lookups, scenario controls, error checks, automation, visualization, SQL or business intelligence tools, and the importance of making analysis reproducible and reviewable. Question 12. Tell me about a time you found an error in a financial report or model. In a monthly reporting file, I noticed that one department's expense increase did not align with headcount or purchase activity. I traced the issue to a duplicated data import caused by overlapping date filters. I reconciled the source files, quantified the overstatement, corrected the report, and informed the manager before distribution. I then added a record count check and a source-to-output reconciliation. The experience reinforced that analytical judgment matters, but disciplined controls are what make reporting reliable. In your answer, explain the control or review step that identified the issue, the financial impact, how you validated the correction, how you communicated it, and what process improvement prevented recurrence. Question 13. How would a change in pharmacy reimbursement affect CVS Health's financial statements? Lower reimbursement would generally reduce pharmacy revenue or gross profit per prescription, depending on the contract and accounting presentation. I would model the impact by payer, drug category, volume, and timing, then assess whether prescription volume or mix might change. The income statement would show pressure on revenue or margin and operating income. Cash flow could also weaken if profitability declines. I would evaluate offsets such as higher generic utilization, procurement savings, labor changes, or renegotiated terms before concluding on the full effect. Focus on prescription revenue, gross margin, operating income, payer and product mix, volume response, receivables, cash flow, contract timing, and the need to model offsetting actions such as cost control or increased generic dispensing. Question 14. How would you evaluate the financial impact of an acquisition or integration initiative? I would start with the standalone forecast and then layer in purchase price, financing, integration costs, revenue synergies, cost savings, required investment, and timing. I would distinguish recurring benefits from one-time savings and test retention, execution, and regulatory risks. The analysis should include earnings, cash flow, leverage, return on invested capital, and sensitivity cases. After approval, I would track realized benefits against the original business case, explaining gaps and updating management on payback and long-term value. Be sure to mention purchase price, revenue and cost synergies, integration expenses, customer retention, investment requirements, timing, accounting effects, cash flow, return thresholds, and comparison of actual benefits with the original business case. Question 15. Explain EBITDA, operating cash flow, and free cash flow, and why each matters. EBITDA approximates operating earnings before interest, taxes, depreciation, and amortization, so it helps compare operating performance but is not cash flow. Operating cash flow starts with net income and adjusts for non-cash items and working capital. Free cash flow typically equals operating cash flow minus capital expenditures, showing cash available for debt repayment, acquisitions, dividends, or reinvestment. For CVS Health, working capital, claims timing, pharmacy inventory, and capital spending can make cash conversion materially different from EBITDA. In your answer, distinguish operating profitability from cash generation, explain depreciation and working capital, include capital expenditures, note limitations of EBITDA, and connect the measures to investment, debt repayment, and valuation decisions. Question 16. How would you prepare a monthly management reporting package? I would begin by validating source data and reconciling totals to the general ledger or approved reporting system. The package would include an executive summary, actual versus budget and forecast, segment performance, key operational metrics, material variances, risks, and recommended actions. I would tailor detail to the audience. Leaders need the drivers and decisions, while finance partners may need supporting schedules. Before distribution, I would confirm definitions, investigate unusual movements, and ensure every major action has an accountable owner. Focus on data integrity, executive summary, actual versus budget and forecast, key drivers, segment detail, relevant healthcare metrics, risks and opportunities, concise visuals, and clear ownership of follow-up actions. Question 17. How do accounting estimates affect financial analysis in healthcare? Healthcare results rely on estimates because claims, rebates, returns, and other obligations may be recorded before final amounts are known. In insurance, incurred but not reported claims reserves can materially affect medical costs and earnings. I would understand the methodology, compare estimates with prior development, and distinguish current period operations from revisions to older assumptions. When estimates change, I would assess both the income statement impact and the cash timing, then communicate the uncertainty rather than presenting a single forecast as certain. Make sure to discuss claims reserves, rebates, returns, receivables, incurred but not reported claims, accruals, estimate changes, earnings volatility, cash timing, and the importance of understanding assumptions behind reported results. Question 18. Describe a time you had to explain complex financial information to a non-finance stakeholder. I once explained a budget variance to an operations manager who did not work with financial terminology. Instead of leading with accounting categories, I showed that overtime and contractor spending were the primary drivers, using a simple monthly chart. I explained the operational cause, quantified the remaining year impact, and discussed staffing alternatives. The manager provided context that improved the forecast, and we agreed on a monitoring plan. That experience showed me that effective analysis requires clarity, collaboration, and respect for business expertise. Be sure to mention simplifying technical language, starting with the business implication, using a concise visual or example, confirming understanding, listening to operational context, and translating analysis into a specific decision or action. Question 19. How do you prioritize when several stakeholders need analysis at the same time? I prioritize requests by business impact, decision deadline, regulatory or executive importance, and the cost of delay. I clarify the question, required level of precision, and intended decision before starting. If priorities conflict, I communicate trade-offs early and propose an interim answer or phased analysis. I protect quality by using standard templates, documenting assumptions, and completing critical checks. This approach helps me remain responsive without allowing urgency to create avoidable reporting errors. In your answer, cover urgency, business impact, deadlines, regulatory or executive commitments, data availability, stakeholder alignment, transparent communication, interim outputs, and maintaining accuracy under pressure. Question 20. CVS Health is facing higher than expected medical costs and weaker pharmacy margins. How would you analyze the situation and recommend actions? I would separate the issue into insurance medical cost pressure and pharmacy margin compression, then analyze trends by product, geography, member cohort, payer, drug category, and period. I would test utilization, claims development, reimbursement, generic mix, labor, and acquisition assumptions against budget and prior forecasts. Next, I would build scenarios showing earnings and cash flow effects. Recommendations might include pricing or benefit changes, provider initiatives, procurement savings, labor actions, or targeted investment, with clear owners and measurable milestones. Focus on isolating drivers by segment, product, geography, and period, testing utilization, reimbursement, mix, and labor assumptions, quantifying scenarios, separating temporary from structural issues, and recommending measurable operational and financial responses. If you are still with us, congratulations, you are much ahead of the rest and serious about preparing for your interview. We hope we were able to add value to your preparation and create some helpful content. Do not forget to like and share this video. Your small act can do great things for us.